Sell in May and go away is a well-known saying in finance based on stocks supposedly underperforming during the 6 months from May 1st to October 31st. I've got a number that'll blow your mind here. 60%. That's how much your Bitcoin you would have lost in 2015 if you had sold in May and went away each and every year. 60%. That's why we hold our Bitcoin and don't try to trade like a knucklehead, all right? So that sounds insane, right? But that's exactly what Wall Street wants you to do so they can scoop up your coins at a discount. Are you seriously going to let an arbitrary saying like that dictate your gains? I sure hope not, people, all right? In the next few minutes, I will show you the facts. I'll show you why this outdated myth is irrelevant for the crypto markets and how keeping your Bitcoin position is the only way to beat the bankers at their own game. Okay, so let's go back and take a look at where the sell in May myth came from. The literal rule is sell in May, rebuy in October. This rule was born on Wall Street where they've tracked stock returns going back for decades. If you've seen the 20-year market heat map, you will have noticed that it flashes red throughout the summer months of May through September. Here are the actual facts. The S&P 500 averages about 1.1% gains from May to September compared to roughly 7.1% gains from October to April. You have to take this with a pinch of salt. There are hints of things like survivorship bias and data mining from 100 cherry-picked cycles. Okay, so some of them can argue that once you adjust for that companies that crashed and burned, this seasonal slump almost disappears. Fast forward today and you've got every crypto guru and Twitter influencer shouting sell in May as if that's the guaranteed way for a crypto investor to be successful. That is just so dumb. So let's think critically here. Crypto is only about 15 years old. There's not enough data to show that this strategy works in this nascent market. And did you notice what happened in May 2020 and May 2021? DeFi summer exploded with massive gains. Imagine you missed out because of an outdated saying. Seasonality might work in stocks, but in a 24/7, 365-day market that waits for absolutely no one, does the calendar really matter? Imagine if you were on the sidelines for just 10 days, the magic days that pack in the biggest gains, like what happened in DeFi summer. Your 10x rally would have crumbled into a fraction of that. How sad. Here's the deal. Across decades of stock data, a teeny handful of days often clustered around huge catalysts drive 75% of total returns. If you missed those days, you're waving goodbye to 3/4 of your entire portfolio. Now let's talk Bitcoin. Bitcoin's 10-year run, the top 10 profitable days tend to line up with momentum from the halving event, positive news regarding ETFs, and macro shock events like money printing bonanza in 2020 during the government shutdown. If you dump your Bitcoin every May and only buy in October, trust me, you almost certainly missed multiple top 10 days. It's impossible to know exactly when those top 10 days will be. If you try to pop in and pop out of the market, it's very likely that you'll be on the sidelines exactly when you should be stacking sats. We are not here to gamble. We're here to invest successfully. Staying invested gets you those gains. Let's put this myth to the test. Being displayed right now is the Bitcoin weekly chart, with every first week of May marked in orange and every first week of October marked in blue. Let's break down what actually happens when you sell in May and then you try to buy again later in October. Look at this chart and you can instantly see that selling in May doesn't always yield the best results. dollars. We'll discuss this a little bit more later on, okay? Let's imagine for a second that you started with one Bitcoin back in 2015. After 9 brutal May to October hops, you'd be staring at about a 0.39 Bitcoin in October 2024. That's over 60% of your stack gone. Chances are selling your crypto in May presents even more risk than missing a little upside like most people do. I don't understand this. You're handing over your coins to someone who stayed put. So ask yourself, are you really going to trust this dusty old stock market rule when the numbers clearly show otherwise? Here's the flip side. Let's again start with one Bitcoin back in October 2024. And let's say we just buy $100 into Bitcoin every single month. No selling, no timing calls, just dollar cost averaging. Check out this yellow line right here. By October 2024, you'd be sitting on roughly 9.74 Bitcoin. That's an 874% net gain compared to that sell in May, go away crowd, all right, who would have lost over 60% of their stack. Are you seeing the ridiculous gap here? This clearly shows how crucial it is to be in the market during those 10 days. Time in the market beats timing the market. Every single time, hands down, the dollar cost averaging does work, okay? Let's examine the second bull cycle from late 2015 through early 2017. Fundamentals surpassed any seasonality during this cycle. Network activity was way up, miners were buzzing, and everyone was talking about the second halving. If you had followed the sell in May rule in 2017, you'd be definitely kicking yourself right now as well. All right, from May 2017 to October 2017, Bitcoin blasted from around 1.3K to a huge $6,200. That's a 360% increase that you would have missed out on, all right? Seasonality, non-existent. It was all about fundamentals. So let's talk about DeFi summer now. And let's look at ETH for this, since that's really what DeFi summer was all about. If you sold in May of 2021, right before the real explosion of DeFi summer, ETH would have only been down around 18%. So if you could have bought back 18% cheaper, you would have completely missed out on DeFi summer when alts were ripping 1000x like no tomorrow. So let's say you then bought back in October and sold the following May. Guess what? You would have lost 27%. That would have completely killed any gains you made in the previous year. So not only would you be down, you would also mentally have to deal with all the stress for that year. Keep all of this in mind if you are considering selling in May. Sell in May might work with stocks, but crypto is a completely different animal. If you'd followed that rule, you would have trimmed your stack by over 60% and potentially missed DeFi summer fireworks in 2020, 2021. Remember, flowers bloom after storms. Don't uproot your position just because it's May. And if you want to know exactly when we're going to be selling during this bull market, we've already taken profits already, but if you want to see that when we're going to sell even further, then check out lordandcrypto.com. The link is down below. And you know what? I think selling at the top of a parabolic move is going to really be able to help you, especially during the next bear market that we are going to have, because we are eventually going to have a new bear market after this bull market is done. Talk to you soon.